Hi everyone, for those of you who don't know me, my name is Dillon Castro with AEIS. I'm a benefits consultant, and our company, AEIS, stands for Advanced Estate and Insurance Services. And today what I want to talk to you about, of course, is, we're still in the midst of the COVID-19 pandemic, and this is going to be kind of a two-parter, if you will. But this first video I want to talk to you about a type of plan funding that we call level funding, that is a little bit different than your standard health plan. And I think it's going to be really important for a lot of people to know about this because, of course, as the pandemic has wreaked havoc on businesses economically, even with all the aid and stimulus that the government has put out, which has been wonderful for a lot of our clients, there's still going to probably be some ramifications that we're going to experience, some ripple effects over the next few years, more than likely, we would anticipate. And it could be for many years, for all we know. It's just not clear yet. But I think that for a lot of people, looking at their bottom line and ways to save, particularly on something like health insurance, which is one of their biggest expenses for almost every business, I think that's going to be really important. And so we wanted to share some tips about some types of health insurance that you could ask us or your other advisors about. And again, today is about level funding and the way that it differs from your standard health plan, right? Your standard small group health plan is going to be based on the age of the people enrolled and the zip code of the business. And that's essentially the only rating material. So there's not really any room for negotiation. And aside from that as well, you're grouped by your community or your county. And so what that means is that no matter what your utilization as an individual employer is, it's not going to affect your price, which means that, if you have a really high utilization, maybe that actually works out better for you. But a lot of companies are on the lower side of that utilization curve. And so if we can find a plan that allows them or incentivizes them to, give their employees resources so that they can stay healthier, whether that's wellness or, giving them preventive care techniques or teaching them about going to urgent care instead of the ER, or using something like teledoc or telemedicine instead of going to the urgent care or ER or even for a doctor's visit. Any ways that we can help the employer kind of lower their utilization can perhaps make a little bit of an impact. And that's where level funding comes in. Level funding is based, usually an insurance company that does a level funding plan will take all of the employees' individual sort of situations into account when they make the premium. So there's a bit more of a negotiation quality to the actual price that you pay. But even more than that, there is a ability for an employer to get a refund from lower utilization than is expected by the insurance carrier. And that can be a big deal. We've been able to, in the past, hand our clients back, checks or premium holidays, as they're sometimes called for some of the carriers, in the upwards of $40,000 or $50,000 of their total spend. And that example I'm giving you in particular is actually for a company that's about 30 or 40 employees. And so that really represents, I think, almost about 8% of their entire healthcare spend. And that's a big deal for a lot of companies. That's not some small change. And again, I think as we get further through this pandemic and get out sort of on the other side of it, people, financial stewards and business owners are going to be looking for ways to, make their healthcare run a lot more efficiently and perhaps a little bit better. One of the other benefits of level funding is that you can customize it quite a bit as well. So for an employer that wants to maybe offer something richer or wants to have something that's different than your off-the-shelf product, that's going to be really helpful as well. But in any case, again, this is a two-parter. We're going to come back next video talking about a technique for people who utilize more of like a Kaiser HMO style plan, and sort of a way that you can reduce your cost and have utilization come more into play there as well. But in any case, again, my name's Dillon Castro with AEIS, and thank you so much for watching our video, kind of learning a little bit more about what we do. As always, you can leave a comment if there's something that you would like for us to be able to talk about, whether it's a question or a topic you want us to cover. I thank you for being here with us and learning a little bit more, and we'll see you next week.